Hello and welcome everyone to Gold Asset of the Day for the 26th of January 2021, presented by myself, Phil Carr, at the Gold and Silver Club. And really following on from the week ahead commodity reports, we are still in this range-bound price action at the moment for gold in the lead up to Wednesday's FOMC statement and also contract settlements. As we mentioned to you last week, expect the potential for a correction and some degree of profit taking on gold after the slingshot move that we got at the beginning of last week, which actually booked us 1,250 points profit at the Gold and Silver Club. That, of course, was a trade opportunity we talked you through. We saw a breakdown all the way down to $1,803 per ounce at the beginning of last week, and then we had the breakout later in the week on the inauguration of Joe Biden on the Wednesday, breaking out towards two-week highs at $1,874 per ounce. Subsequently, we've seen that correction after the European Central Bank on Friday. And with that, we're still consolidating right now around $1,848 per ounce, up towards 1,868. So we're literally within a $20 range right now, 200 points over the last 2 days. Normally, the way it works with gold is you will get these very fast breakouts, especially to the upside or the downside, but they're very fast moves, often lasting 3 days. And then you often get over a week's worth of consolidation and then the next big move. So you want to be positioned for that, because what happens with many traders out there is they just get worn out. They lack the endurance and the stamina to stay in positions, or certainly they keep panic selling out of trades just as we're about to see some massive moves on the market. And you want to be mindful of that. We do have FOMC statement on Wednesday and also US GDP data coming out on Thursday. And of course, as we transition into next week, we also have Friday's non-farm payroll data, and we're going to be moving into a new month. There are some very specific cycles that gold tends to follow as we move into the month of February, and I would look out for the potential also of fresh buying next week at the start of a new month. But for this week, you definitely want to be mindful that the overall narrative is focused on the FOMC statement. That will be delivered at 7 o'clock GMT UK time on Wednesday, and then 30 minutes afterwards, you do have the press conference with Jerome Powell. And of course, Janet Yellen has now been confirmed as Treasury Secretary. That helped certainly gold last week catapult higher, over a 700-point move off the lows that we discussed with you last week. So I hope many of you have been able to capitalize on that. Certainly clients at the Gold and Silver Club, it's been very profitable with a 1,250 points banked on gold. Now, a few other points to keep in mind right now. We have seen silver prices so far this week still hold above that $25.50 per ounce handle. The gold silver ratio has broken down. In fact, the dollar today has pulled back again, tapping the 90 level. So typically when you see the ratio breaking down, the dollar under pressure, it does tend to favor the metals. Now, I'm not ruling out the potential this week for a quick move back down to key areas of liquidity for gold. So if you were to get a dip, it's sub 1850 again here for gold, I would look at that as an opportunity to add further positions. And what we've seen a lot lately, particularly in the gold market and silver to a certain degree, is many technical traders have been taught incorrectly. They're just using gimmicky indicators, just outdated technical strategies, which haven't helped them at all. So a lot of them have been liquidated, panic sold on some of the recent sell-offs, or they've been the wrong side of the trade, they're liquidated. And this just comes down to the point at the moment that in 2021, you want to be more savvy than that. You want to be utilizing data, intelligence, trading the research-driven approach, trading the same way that the hedge funds, the money managers, the banks, and the market makers. It's so important that you're now recession-proof and have the ability to, of course, generate multiple income streams. We're in such uncertain times right now where job security just isn't there. And you want a powerful way to really be able to supercharge your savings, supercharge your returns, and also an essential skill, which is no longer a nice to have, but it's actually a necessity now in today's current conditions, where COVID-19 and the ongoing global restrictions we see are not going away anytime soon. So it's so important that you maximize this opportunity right now. We're going to see lower interest rates for longer, and this is going to be a fantastic opportunity for you as you move into the Joe Biden era and Janet Yellen as Treasury Secretary, for you to really maximize it on commodities. And of course, if you would like to find out the research-driven approach to the market, where you're going to be utilizing data, market intelligence, trading the same way that the hedge funds, the money managers, the banks, institutions do, access and understanding of daily cycles, weekly cycles, monthly cycles, along alongside sentiment, seasonality, macroeconomics, and marry that up with capital flows, geopolitical risk, and understanding key liquidity zones. If you would like to find out more, join our community of successful traders and learn our professional research-driven approach to the market. There is an opportunity for you to do so. Just click in the link below today's report in order to make an application to become a member of the Gold and Silver Club.